Greetings, everybody. This is Jeff Scott. It is, you can't even see it there. It's about 10 a.m. on Sunday, the 22nd. I am doing this from my hotel room in Tampa. I'm going to do a 45-minute short one here, hopefully, as I've got to go catch a train. Yes, a train back to West Palm Beach. Choice of a train or a puddle hopper. Hope everybody's having a great weekend. I had the opportunity to go to see Kenny Chesney last night with my lovely wife. What a great time. And graciously, she's letting me do this instead of not letting me do it in her presence. She's tired of my webinars. I entitled today Indices at Crossroads. Again, I could have, last week it was 2 steps forward, 1 step back. I could have said 3 steps forward, 2 steps back this time. This market is sort of bouncing around between its support and resistance, and which way will it go? And a death cross isn't that far away, so it should be interesting to see what happens. At the end of my webinar last week, I ended on a bullish tone, which I think certainly reflected Monday through Wednesday, but just like last week, there's a lot of countercurrents that we're dealing with. As always, it's for educational purposes only. Anything I present is in the spirit of education, should not be considered investment advice. I'm a doctor, not a broker. I'm independent, and trading involves risk, and you alone are solely responsible. I always entitle my education as Be Your Own Guru. As I learned from the master Ian Woodward, I am not a guru. I teach you to be your own guru. You need to learn from a lot of people. I listen to a lot of people. Then I come up with my own way of trading. I started with canceling with O'Neill, improved by Morales and Catcher, further improved by Woodward and Brown. John Person really taught me how to be a trader, when to take the trade, when to sell the trade, position sizing, money management, gave me the conviction to do what I do today. Van Tharp, money management extraordinaire, and then my buddy who's doing a present program this week in the West, George Lee, who I shared the podium with a couple weeks ago. I have a lot of programs. I hide them during this webinar so I don't have to talk about them, but I need TradeStation and Thinkorswim. I also, HGSI and NetTrader are my keys for after hours and sometimes intraday analysis. Yes, I follow seasonality, but technicals trump seasonality. HighGrowthStock.com is the website for HGSI. It has nothing to do with me, except I love the program and I like to support them. There's a free 30-day trial with no credit card, and under investing strategies, we'll find hundreds of videos by yours truly and my buddy Gil, who you can see here, Gil Morales, Ron Brown, and others. Stock patterns are cyclical. High growth stocks fall like rocks. You need to know what stage you're in before you buy a stock, both the market, the industry group, and the stock. And every stock goes through this pattern. We live in this red circle. Every time I think we're about to go down into stage 4, we take another leg up. Will we see another leg up this week, or are we on our way down? I think it's such a tough question that you have to play uncertainty. And when I go uncertainty, I raise cash, I take smaller positions, and I sell premium. The other thing that happens is my stops work, and I have a lot less positions than I had before. So I'm ready to go to bullish or bearish based upon what I see at 9:31 on Monday morning. But I am certainly in uncertainty. I've got long and short positions on, and I'll cover the side that's wrong when I'm convinced that the market starts to trend again. But right now, we're sort of chop off the top of this, and we're just going around in a trading range. Friday's sector review. Friday was tough. I know it's hard to see this. The point is you can see red versus green, and you see mostly red. Where is the green? The green is in banks. And we'll talk about interest rates. There's some green in energy, not a lot of green anywhere else. So it was a tough day on Friday. You know that. Major markets tell the story. Let's quickly look here. See if this is going to work. Wrong one. Let's try this one. All right, this will work. Maybe. Yep. All right. Sorry, I should have had that start before I did it. See where we are in this. That's still doing that. Okay. So very quickly, I'm going to run through and just give you my take. This is going to be more of a reporting on what I see video than a teach you how to use the programs video. I do these for myself, not just for you. Here is the E-minis. I use the E-minis because you pick up some of these bottoming tails, which are gone by the time the market opens. You could see we've held support here a couple of times. We are running between the 50-day, this is weekly, hold on a second. My bad, let me go to the daily. Not that the story's that much different. You'll see we held support a lot more than 3 times. On the daily, and I talked about this last week, how many times we've held at this 200 that eventually you're just going to go up, and we did. We failed at the 50 and are coming back down. You've got a trading range here. You got the 50 on top, the 200 on the bottom, clearly in an uptrend with the 200 below the 50, but not a great uptrend with the 17 here in between. That's a PPS sell signal. That was a buy signal. We'll see if it comes all the way down and bounces. We'll have to see what happens on Monday. This is such an unpredictable market because of news. On the NQs, a very similar pattern. No reason to spend more time talking about it. On the YMs, the same story, failed at the 50. On the IWM, using this because the futures were not available, I guess probably have enough time on the futures to go back to the futures on their new symbol. You had a low close doji occurring here. And a reversal in the IWM, which is actually the best looking thus far, well above its 50, with the 17 about to cross above the 50, also has a PPS sell signal. We look at the VIX. The VIX is now basing around the 16 range compared to where it was around the 10. I actually took a long volatility position over the weekend just in case, and we'll see if I get rid of it or I hold it for a couple of days. And then the dollar has a new PPS buy signal. Now, the dollar has been in a downtrend as evidenced by this falling 200-day moving average. It's had buy and sell signals. It's been very much range-based as well. So if I do go very quickly to the weeklies, just to see if I see anything here that I want to talk about. So remember, now we're looking at weekly charts. And we're going to go quickly. Uptrend, 17 weekly above the 50, above the 200. Failing at the 17 weekly, which is about 85 days worth. Here's the NQs, the YMs. Again, the TF's the strongest above the 17 weekly, but a shooting star-like, not a perfect shooting star. And one could see the VIX with a big bottoming tail. This is why it went long the VIX on the weekend. We'll see if the VIX spikes, and then the dollar really going nowhere. So my take on the markets is it's indecision. We could break above the 17-day moving or the 50-day moving averages and go on to new highs. We could break below the 200-day moving averages and go to new lows, or we can just bounce back and forth between them, which seems to be what we've been doing. I put all these up here because it gives me a chance on one slide to look at daily, a weekly row, and then a monthly row. And then my columns are the E-minis, NASDAQ futures, Russell futures, NYSE, which is not futures, and the Dow futures. What do I see? Same thing as always. The monthlies are in nice uptrends. We have a new monthly sell signal on the NYSE. That's the only one that's in a sell signal. On the weeklies, we're in chop. And on the dailies, we had just run up and ended up with sell signals. So everything's pretty consistent. There's no big outperformer. I did mention in some ways the Russell has looked a little bit better. Rates rocketed higher this week. This is the rate tail here, straight up on both the 10-year and 30-year. I think the 2-year was actually above 3% at points last week. What are good rising rates for regional banks? What did I show you hit strength over the last week on Friday? Regional banks. REITs, MLPs, utilities, dividend payers, home builders get crushed if rates rise. Now, you'll also notice here is this is my pain line. And I sort of just spent a lot of time looking at rates. And somewhere above 3%, I think we're going to have pain on the 10-year. And we're getting close. So high rates may be the end of this bull market. It's certainly something to look for. I've had other people come up and say no, Jeff, 4% is pain. Well, we'll see. But clearly rising rates are not a positive for the market. Now, the AD lines, and you can see on white would be the Russell AD line, 2,000. And in white here where my arrowhead is, the 1,000 are approaching new highs, pulling the indexes up with them. If I look at the NYSE AD, you can see, again, sort of a triple top near a new high and pulling the various sector ETFs up. And then the one thing to go down with rates rising are bonds. And you can see TLT looks rather ugly. Just as an aside, I'm going to switch to probably a 2,800 by, I think, 1600 monitor for next week and try a little bit higher resolution. The lower resolution makes it tough to show some of the things I want to see, and we'll see what kind of damage it causes to the ones that watch my videos if they can't see anything, but that's just to give you an alert. Breadth remains strong but not overbought on both the 200-day and the 300-day. We increased. This would be overbought. Down here is oversold. I look for extremes. We don't have them. Speaking of extremes, this is my favorite, the 3-month new high, new low. Those that use Telechart T2121. When we get down near the bottom, we reverse. When we get near the top, we reverse. When we're in the middle here, we don't have a signal, and this is where I would say there's no signal. The daily McClellan, speaking of no signals, we're not at extremes, no big divergences. Clearly have some trend line resistance you could see on the S&P 1500 that we're going to have to break through. This is a tough market right now. Same thing on the weekly. When I look at some of my edge rater breadth, current buckets, take all the stocks in the S&P 1500, stick their Bollinger Bands on them, and see how many are above versus below the midline. 2/3 are above. That's bullish. That's interesting. And then where do they fall? Very few are below or above. I look for extremes there for turnarounds. But there are a lot of stocks at the upper part of their Bollinger Bands. Not quite a signal, but this is heading towards something that could be a little overbought. Not yet. There have been no HINDY going back since February 1st. The Hindenburg is a signal that would suggest that we're near a top. Most major corrections, in fact, all major corrections have followed a series of HINDYs or at least one HINDY. About 25% of HINDYs are real. The rest are just small changes. And again, we haven't had a HINDY in 2 months. The market's got to run up higher before you're going to get a HINDY. The market tone is still bullish. This was a bit of a surprise last week. Despite a mixed opinion going through my webinar, I did talk about the fact that this was all green, was bullish. It's still bullish. And if I looked at the sectors, not as bullish as before. We've got red in staples and yellow in healthcare and utilities, but still lots of green. Now, I put together a number of indices. I retired one. I retired the 2017 leader indices. So now we're going to look at the Canaries and the melt-up index. The point of these indices is you take the leaders in the market and you use them as an early warning signal of either a recovery or the market taking a dump. This is the Canaries listed here. Yes, I know Priceline is now called bookings. That's in the chart. I just didn't change the graphic. But you could see that we actually had a nice recovery and the Canaries got above the 50-day. A low close doji on Friday is kind of worrisome. We're still in a weekly bongo sell, sitting right on the 200. So a bounce from here would be bullish. Break down there where we're back in the trading range. The melt-up leaders, I put these together on the 21st. These were my early warning signal for this market. They were the leaders in the market at that time. Some of these, like Skechers, Home Depot sold off. United Rentals started selling off. YY has been clobbered. Several of these have been hurt and are no longer would be considered leaders. But they worked because they sold off here prior to the current pullback. Now, they had a low close doji right below the 50-day moving average, a little bit more ominous there. So they're lagging, and that does not portend well for this week. So we'll have to see. I'm still kind of mixed in my opinion. Know your news and your earnings. So from a news perspective, one good thing is there's not a lot of talking heads. Somehow these talking heads from the Fed, they seem to talk the market down a lot. There's some news, you got employment cost index that in the PMI should be interesting on Friday. A bunch of bill announcements and auctions. We've got energy numbers on Wednesday. Sort of a mixed news. I don't see a ton of news here, but several things can move the market. What is likely to move the market are earnings, and as I put here clearly, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Google's, Boeing, Visa, Facebook, Amazon, Microsoft, Intel, Chevron, Exxon. Do you not have a big week or what? I have as people know, I talk about a lot. My major position is Amazon. I actually sold a bunch of calls when it was above 1600 against my position, and I'll have to decide whether I cover my calls, whether I buy puts, whether I let things ride. Amazon is one, when it moves a lot. Problem is it can move both ways. So I'll be looking at my seasonality charts to figure out what I'm going to do. So my thoughts, it's a busy week for earnings, which may be key in any market direction. Interest rates rise above 3% on the 2 years, may shake out some of the bulls. Energy is still strong, especially refiners, but explorers, services, and integrated still look good, but a lot of people think oil may be topping. The best of the bunch are the refiners. Regional banks and insurers are poised to benefit from rising rates, but beware of interest sensitive, such as home builders, utilities, REITs, and other dividend payers. Last, technology and biotech were past leaders that were not leaders on Thursday and Friday. They weighed on the indexes. And despite the sell-off, the week was still up. And lack of clear-cut direction should drive some caution. Keep your powder dry for when we break above or break below, above resistance or below support. Let's go into my top-down review. I was doing a trade station update, so now I'm going to hit OK. So we may have to come back to trade station because it's probably going to take some time for it to load. All right, so let's take a look into, hold on here. Now you're all going to know my password. Got that? Asterisk, 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 asterisk. And let me just pause it first. All right, I just paused it to let trade station run. One of the things that gave us the clue last week that the strength was in the market were these charts that we're going to look at right now. Let me just get this set up. And that was that there was fresh John Person buy signals. And when I saw that, I thought, maybe this market is going higher. Well, this week will be the opposite. That symbol, just put my Russells in here. So let's start look at the E-minis. All right, of course. All right, one of these days, I'll remember to do this first. All right, so the E-minis, as you could see, 1, 2, 3, 4, 5, 6. Midweek, a week ago, we had a new buy signal. We ran right up. So the E-minis, we have a sell signal in blue. So the sell signal is PPS. The blue is a hold from Alexander Elder's impulse indicator. We are still in a sell weekly, but we're in a buy on the monthly. So at least we have a short-term sell signal. We look down here, our weekly bond goes red. I also look at things like red dots above, green dots below, which are signs of a slowing move and potentially some divergences. I look at position within the envelope. We're right in the middle. I look at my high jump and my bongos. So sell signal on the E-minis. So E-minis look weak. Certainly don't look like they have a lot of power to go higher on Monday, although futures could change everything. The YM, the Dow futures. I went the wrong blue. So the Dow futures. Come on, Dow futures. This is weird. Let's try Russell futures. This is interesting. They're all supposed to work at the same time, and they're not. So let's have that go here. At YM. Getting to wonder if they're on different blues. Let's see. At YM. So if I look at the Dow futures, a new sell signal there. If I look, all right, I bet that's the problem. Let's change this blue to that blue, this blue, that blue, this blue, to that blue, and then this thing. All right, they're all in the same blue. So Russell futures, probably not going to, of course, not. I hate doing this when I'm not on my home internet, but we may just bail on TradeStation if it's going to be like this. Come on, TradeStation. All right, I'm going to bail. I think it's pretty clear that we've got new sell signals on TradeStation, so that's got to stiffen you a little bit. And again, why I took some volatility positions. All right, let's take a look in HGSI and see if we can't make heads or tails of this market and find out where the strength and the weakness is. So I always start, well, first let's look at how the markets did last week. So this was kind of a surprise to me because I thought Thursday and Friday were pretty tough. But first of all, you notice there's more black than red. That means the markets were up. Now, the S&P 500 from an end-of-day Friday to end-of-day Friday was actually down 0.25%. I think it's going to matter from what you start with and what you end as to what the performance was. Growth stocks IBD 50 was down 0.69. Now, when I put weekend bears and shorting candidates, these would not be long. So this, if you have to reverse this. So the stocks that I would have shorted were actually up about 1%. Now, the interesting thing was my stocks were up. My buy watch was up, interestingly, 3.31%. 36 winners versus 9 losers. That's pretty phenomenal considering that the market was down. And the stocks that I had at the end of the week were up 1.3%. 1.5%. So for me, it was a pretty good week in the market. You know, it was a tough week, though, when the HGS 100, the S&P, and the IBD 50, though, were all negative. All right, so now we're here. Woodward & Brown User Group full, Major Markets Plus, Warehouse. I'm just sizing it. Part of why I made my comment that I'm going to change resolutions is it's really difficult on me to have to change everything, sizing it every time I do a webinar. And, you know, since I do these webinars for free, I'm trying to make my life as easy as possible. And by the way, I think I'm probably going to retire from webinars probably on June 1st, just to give you a heads up. I turned 60. That just got my wife a smile. Look at that. Forever, Sherry. Top-down view. Here is what was working mostly on Friday, some for the week and a little bit for 3 weeks. And you can get an idea of where the strength was in the market. Oil, commodities, dollar, silver, gas up at the top. The NYSE that has a lot of energy and utilities. Small stocks actually in the middle, and then the big stocks, NASDAQ, S&P 100, and the biotech and semis just got hammered at the end of the week. If we look at 5-day performance and we look at that S&P 500, you can see if you look at from the open on Monday to the close on Friday, it was up 0.5%, but from close on Friday to close on Friday, it was down a teeny bit. But that's where the market sits right now. Relatively flat on the indexes, except for semis and biotech, and volatility was weak. It's been weak forever. It's probably a sucker's bet for me to have gone long, but I do it to sort of protect my portfolio. And if my portfolio goes up, the volatility goes down, and the position I take, that's good for me if the market goes up. I like to lose money on my volatility position. So very quickly, nothing here should be a surprise. S&P 500. Let's look at this clean view right here. S&P 500 is in weekly bongo down. You could see a low closed doji here, uptrend doji, closed below the doji, already moving down. My target here has got to be the 200-day moving average and hope that it holds. At some point, we're going to break above or below, but we have been in a trading range for some time. And notice you don't see the tails on the S&P 500 like you do on the futures. That's the S&P. The NASDAQ looks the same, a low closed doji, back into the trading range. The Dow futures, which we didn't get to see, or the Dow rather, which we didn't see well, and TradeStation also back within the trading range. The Russell, which we mentioned earlier, was the strongest of the bunch. And, you know, had a low closed doji here after the run-up, but is above the trading range, still the strongest of the bunch. The dollar had a little Bible gap up on Friday. The dollar's going to have to get through the 200-day moving average before I believe it, but this is different. That is bad for certain things. It's certainly bad for bonds. In fact, let's look at the TLT. And with the dollars, the interest rates going up, the bonds dropped, as you can see here. Take that back. The dollar's bad for commodities, not bad for the bonds. It could be bad for the bonds. Bonds are down because of interest rates. Dollar's bad for gold. That's what I meant to say. And gold pulled back towards the 50, still above the 50. And silver as well. Interested in how it did gap up early in the week. I heard a very bullish presentation from a gold bug at George Lee's online summit this weekend, which makes me wonder about gold, but I'll wait till I see it. I'm not going to jump and predict it and front run it. And then volatility, as I mentioned, higher than it was when the market was quiet. 3 green bars in a row. Are we going to take another spike up? I kind of position myself for it, but trust me, I'd rather the VIX goes down and the market goes up, but I took it as a hedge. If I look at industry groups, where's the strength and the weakness? Here I'm going to go to 2-day force. And what do we notice? Only 19 groups are to the upside versus 20 to the downside. That's interesting. So that's kind of a indecision. And then how about 5-day up versus 5-day down? 5-day ups, I got 46, and 5-day downs, I've got 47. You couldn't have more indecision than we have right now. We are in a trading range, and it's going to be like this until we break one way or the other. So, energy and banks, energy and banks, energy and banks. Oil, gas services, 1 energy, exploration 2, marine shipping, that's somewhat energy related 3. We have 3 energy groups out of 19. We have little banks and big banks, 2 out of 5. Interestingly, generic pharma made it. And then here's your life insurance, PC and property and casualty insurance. So the money is the financials and energy. So let's just do a right click, change the industry group, and take a look at some of the, all right, hold on a second. Hold on a second. I want to explain something here. I'm going to stick with the 2-day EMA up. Let me go back here. So what I've done is I'm going to look at the top couple of groups. By right-clicking, change the industry group, they list. The interesting thing is only 1 stock made it force above the index. Now, sometimes I will do the scaled, which basically neutralizes the high volume, and none of them made it above the index. So that's kind of concerning. But let's just take a look at what we got. Baker Hughes, I thought was interesting from a potential buy perspective, and it's on my buy watch list, or some of them. Here's a stock. Why? Because here's a stock that's been languishing, but it's gone from about 26 to 36 since the middle of February. Broke above the 200. Everything is green. Group strength is strong. Great earnings per share growth, and pays a 6.4% dividend yield. If energy prices remain strong, that looks interesting. You know, the index itself broke out maybe 2 weeks ago, looks good. The big players are Halliburton, that has earnings this week. Looks a lot like the index, doesn't it? Although I don't like this little pattern here, although it did close within the body. It's not a low close doji. Schlumberger, the big player as well. It had earnings, SLB. I don't see it there, so let's take a very quick look at SLB. And Halliburton opened down in sympathy with Schlumberger, which sold off some on earnings, also has good earnings per share growth. All right, so that's oil exploration, banks. So these are the regional banks. So a couple of these made it to my buy list, especially, well, I think the first 4 or 5, several of them look good. So let's quickly take a look at them and see if there's anything here that might be an interesting story. Now, a lot of people say, oh, I don't have this view, I don't have this view. Come on, guys. All I did was take the webinar view and remove the VSA dots from price. Not that hard. So, clear-cut uptrend. Oh, my wife's laughing. She's excited because I said I'm going to quit this.
No, because you say it's not that hard. Everything's not that hard to you.
That's true. Uptrend, sideways, trying to retake the 50. Pocket pivots, kahunas, mobile breakup from a squeeze, great earnings per share growth, twice what the multiple is. Regions Finance looks like it's poised to go higher with rising rates. Associated Bank Corp had a Bible gap up on Friday. Must have had earnings come out. Again, earnings twice. what the multiple is. So you had a kahuna, pocket pivot, Bible gap up, mobile breakout from a squeeze, and a weekly bongo. Looks pretty darn good, doesn't it? Core. A little further in the pattern, but you could put your stop probably right below that 200-day moving average. 2 kahunas, a pocket pivot, mobile breakout from a squeeze, good earnings per share, and a 2% dividend yield. That one looks interesting. I'm not even going to call this UMPQ. This one I like the best because it seems to have broken out of its trading range. Had multiple pocket pivots, kahunas, mobile breakouts from a squeeze, great earnings per share growth, and a 3.4% dividend. There's a bull market somewhere, and with rising rates, banks are going to be a place to go play. So I would be looking at adding regional banks. Now, I didn't look at it, so let's just look at it very quickly. What I'm saying I didn't look at was KRE. This is one way to play regional banks. It's a ETF. It should look like the stocks we just told you, although I didn't look at it yet, so I don't really know that for sure. And here you have down, ready to poised to break out. KRE is a way to not worry about individual names. Generic pharma, surprised to see that. There was a story here, Discerna, that's the reason why it's up here. It's a new stock, if I remember correctly. And you gotta hate this pattern. It traded up to 15 and closed at 12. Earnings per share loser. I'm going to skip this one. This whole group's brought by that one. Never mind. Exploration and production. We've been in this group for a while. There's a lot of nice stocks in here. I'm going to demonstrate the scaling feature in a second. APC, this is a big one. You know, we were talking about it back here, breaking above the 50 with a kahuna and a mobile breakout from a squeeze. It's had a run. Look at the earnings per share growth up here compared to the multiple, which didn't exist because it's a turnaround stock. It was negative. This one can go a lot higher. Occidental, pure play oil, back up to its previous highs. Great earnings per share growth, 4% dividend. Here is EOG. Here's Oasis. So these look great. This one broke out from a downtrend. Now, the problem is, how do I find the ones that are really moving, not just the big ones? And if you look at the volume on these somewhere, I must have skipped it. The volume on these stocks is pretty big. That's what's driving force. So I go to scaled, and the smaller stocks are going to come up. And let's just take a look if there's anything here that we like. CNOOC is not a smaller stock. This is a big one. Nice breakout here. This was the time to buy. Mobile breakout from a squeeze, pocket pivots, and a kahuna breaking above the 50 with a PSAR reversal. It's already had a bunch of a run. I'm not going to buy coal. Diamondback, this has been one of our favorites. Fang, finally back above the 50. So you get a different flavor. This is one that's sort of a recent offering, Wild Horse. I like this one a lot. This was the time to get in it, obviously. So I might look for a pullback, but this is a young stock, and it's really moving nicely. It's gone from 39 a quarter to 180 a quarter in revenue. So exploration looks interesting. Go back here to the regular force. Diversified banks. These are the big boys. So even Wells Fargo, the bad boy of banking. Dummy accounts. Is it done going down? It's kind of buying it off of the same place it fell to in September of 17. You're buying it off of a nice area, a couple of kahunas, mobile breakout from a squeeze, rising rates. Even Wells Fargo can't screw that one up. Bank of America, also pull back by not nearly as much. Great earnings per share growth. Rising rates will lift all of these. JP Morgan below the 50. So big and little banks look interesting, especially if these rates go up. Steel, are the tariffs going to drive up the cost of raw materials? Well, Cleveland Cliffs, every couple of years, this and Valet makes a run. I'm buying it on Monday. Of course, I'm making that up. It depends what it looks like on Monday. But look at the earnings per share growth. Look at the multiple. Look at what we have here. We have a Bible gap up. We have coming out of a squeeze with multiple kahunas. Cleveland Cliffs looks good. In the same group, Rio Tinto, a little gappy because it's an ADR. The other one I liked was Valet, which had a gap up on Wednesday. Also coming into some earnings per share that look interesting. Wealth management. These guys have had a great run. I do like Charles Schwab. It had a very good week. Chucky here, sideways move. Had a move off the 50 out of a squeeze, mobile breakouts, pocket pivots, kahunas. What's not to like? Look at the earnings per share growth, much more than the multiple. Why do I care about that? Because if I'm growing at 51%, and I was growing here in the 20s, I'm going to multiply my PE by these new earnings. So I have a 59 and a 64. So among friends, what's that, $1.25? Close enough, $1.23. And I'm replacing these two, which is 78 cents. So that's 45 cents of fresh earnings. If I have a multiple of 30 on that 45 cents, it's worth about 13 bucks. So if I meet these numbers and the multiple doesn't change, I've got a $67 stock. Now, the multiple might contract, but I've got the earnings power that will make up for that. I think you buy Schwab here, pocket pivots, kahunas, mobile breakouts from a squeeze. E-Trade, another nice looking chart, similar story. TD Ameritrade. So why are these guys up? They're up because of volume. Here's one you might not know that I went long not too long ago. Is it VI? I got in my buy list, but I can't remember what the ticker is. Virtue Financial. They are a high-frequency trading firm. They take the benefits of the volume and look at the turnaround in earnings here with big EPS growth rates coming in, hence the big move in the stock. This was when you should have gone long, but I'm still putting that on my buy list as well, at least to watch it. Going down the list, 1054, Marine Shipping, Golar LNG. This has had a huge move. If we're going to be exporting liquid natural gas, this is one of the companies that may benefit. So is it too far gone? I don't think so. Buyable gap ups, pocket pivots. Obviously, there's something screwy here that doesn't make any money. But there's clearly, look at this move here. I think this begins a longer move. I think you can still buy Golar LNG. C-SPAN, a sea container company, pays a huge dividend, 6.4%. It's got positive earnings growth rate for the first time in 3, 4, 5, 6, 7, and 7 quarters. Probably because of the growth of the worldwide economy. It just broke out of its trading range. If it trades up from here, I like C-SPAN here, 6.4% dividend. And here is an MLP from Golar LNG. Don't know anything about this except pays a whopping 11.9% dividend. Number 9, restaurants. Not my favorite group, so I'll look at a couple of them. I do like to eat. I just don't like to buy restaurants. Darden coming off the 200 up to the 50. Weekly bond goes down. Doesn't do anything for me. Texas Roadhouse. This one's in a nice uptrend. The time to have bought it was off the 50 here with kahunas, mobile breakouts from a squeeze, a little bit better earnings per share growth. And then lastly, the last group of the top 10 is courier services. Don't know anything about ZTO Express or Best Inc. Let's take a quick look at them. It's in a trading range, so I have a hard time chasing ZTO, although it does have some earnings per share growth. And then Best Inc., this has got to be an IPO. I don't know anything about it. I do like the pattern here. 3 kahunas in the last 6 days, a pocket pivot, a break off the 50. I don't have any fundamentals. I can't say too much. Looking to the dark side, and I'm running out of time, so I'm going to be quickly here. Entertainment, IT, base metals, education. Interestingly, integrated oils, they had a great 5 days, but they were weak on Friday. Aircraft and parts, steel producers, and refiners, frankly, they were up 4.33, but because they have high volume, they have high force, they were down 0.2% on Friday, not a very big move. So that's some of the things that I'm looking at. If I go to my buy watch list, which is pretty big considering I'm kind of neutral on the week, last week was last week. This is a new week, but last week my buy list did pretty darn good. Let's take a look at where these stocks are, and most of these we've probably looked at. So first thing I'm going to do is look for the let's do this. That's easier. Industry groups, we've got a bunch of banks. This is one I liked a lot. We'll come back to it. We have some specialty pharma. I liked one of those a lot too. And then a mixture of other things, a couple of refiners. So I said refiners are strong. Here's Holly Frontier. Come back, back, wherever you are. Sort of a cup handle breakout going higher. And then PBF has been another one. They may have run their course, but look at these earnings per share growth, and they still pay a big dividend. Charles Schwab, we called out. A couple of the banks that I liked. I don't know anything about it. Here's an Argentinian bank. Why did I like it? I like the bottoming pattern here. I like the two kahunas. But if I look at this on TradeStation, see if it will. This is last week, so it's not up to date. BBVSA. What was that ticker? Sorry about that. BBVA. Come on. I'm on slower internet, so if it's not going to work, it's not going to work. I don't have time to wait, so I'm going to go back. Trust me, on TradeStation, this looked pretty good, and I think it was the weekly chart. High close doji on the weekly chart in a strong group. I like this. It looked really great on TradeStation, but it's the weekly chart that got me interested. Bancorp South, sideways move. Pocket pivots, kahunas, mobile breakouts, new bongo off the 50. Good earnings per share growth, twice what its PE is. I like that a lot. Regions Financial, we looked at. Seacoast Banking, here's another same pattern off the 50 with momentum. And Ubiqua, we looked at that one already. We looked at Wild Horse. Cariza Oil and Gas was another one I liked. A move off of a squeeze with a kahuna. And Western Alliance Bancorp was another bank I liked. Again, I'm boring. I like buying stuff that are sitting on the 50 with mobile breakouts from a squeeze, pocket pivots, and kahunas. In this market, they have worked well for me. Anything else that I want to show you? Yeah, I did want to show you something down here. Here's Virtue. What was it I want to show you down here? If you follow Jesse Stein and you're looking for Jesse Stein stocks, these would be stocks that are fallen angels that have been going sideways for quite some time that start to show momentum. Oxygen, AKAO, a biotech that doesn't make any money, is clearly stirring. It's going to have to fight through its 200-day moving average, which it failed up here, but it has broken above the 50. That's one that I will be watching, that I liked its pattern a lot as well. And I think on that note, this is actually a competitor of mine. I don't know anything about them, but we do RCM as part of our business. Doesn't make any money, but run up, shallow pullback, two kahunas out of a squeeze, breaking out. Somebody must be looking at this company, R1 RCM. So let me go back on one of the comments I made. I am planning on retiring from doing these webinars. The last one that I'm planning on doing will be Memorial Day weekend. The next weekend I'll be at the cancer meetings. From that point on, I may do them intermittently. I'm no longer going to commit to doing them on a weekly basis. No one pays for them. I've not asked anybody to pay for them. And frankly, the reason why I didn't ask for anybody to pay for them is because I want to be the ability to retire when I want to retire. So it's cost me about 8 hours a weekend, and I'd rather be on my boat. No disrespect. So I moved to Florida for a reason, so I'm going to play golf and boating and hopefully quit my job in the next couple of years and spend all my time with my wife, my boating and golfing. So until, of course, I get grandkids. But anyways, don't fret. There's plenty of places on the web. I'll point out some of them before I get done that I find useful as well. Good night, everybody. Have a great week. Signing off.